To keep yourself updated, subscribe to Indigolearn and click the bell icon and download our app OneFin to start learning on the go.
Hello, my dear friends. Welcome you all to the discussion on our CA Final Indirect Tax Laws RTP for November 2022 exam. As you guys are always aware that we at Indigolearn ensure that every attempt RTPs, whatever come out, and also the examination papers what come out, we always ensure that we'll discuss with you guys. In the same manner, continuing the same legacy, I'm here Shivateja in front of you guys to discuss and summarize the interesting aspects in our CA Final RTP for November 2022 exam in relation to paper 8 indirect tax laws. And I'm sure you guys know very well that RTPs are very, very important because a lot of times it does so happen that specifically sometimes questions from RTP directly come into the exam with small change in numbers. And at the same time, RTP covers some good amount of question in relation to amendments. So let's see what are the questions we have got in our RTP for November 2022. And I'm pretty sure that you guys preparation is going on really well. Just few days is left out for your preparation. Just ensure that you guys put in your best effort. Paper 8 indirect tax laws, which is applicable for November 22 exam, my dear friends. We are clearly talking about their RTP for November 22 exam. So this video is specifically intended for those who are writing in November 2022. Let's see what are the questions we have got in this, my dear friends. Some interesting aspects are there. Let's understand them very clearly in detail. What is that which is covered? First question, which generally will be a case study based MCQ. Let's see what is covered in that. Trent Limited, a supplier of water purifiers, is a company registered with the jurisdictional GST authorities at principal place of business in Mumbai, Maharashtra. Very good. Trent Limited has approached ABC India LLP, a Mumbai-based event management company registered under GST in the state of Maharashtra to undertake following activity in relation to organizing of an event in Udaipur, Rajasthan for its employees. Friends, I'm sure the moment you read this one line or one paragraph, you should recollect the entire concept. That is concept number one. That is, supplier is in Maharashtra, recipient also is in Maharashtra. And this supply is in relation to what, my dear friends? Organizing an event. And I'm sure we guys remember the concept of section 12.7, which deals with the concept of place of supply in relation to organizing an event, which clearly says that if receiver is a registered person, place of supply will be location of such person. If receiver is unregistered person, place of supply is the place where event is actually held. But if event is held outside India, place of supply will be the location of recipient. Now let's see here. Now what is that service ABC India LLP is going to give to Trent Limited? Let's see that. Arrangement of accommodation service for its employees in Udaipur, Rajasthan. Number 2, arrangement of souvenirs to be distributed to its employees attending the event. Souvenirs is something like a small gift. Trent Limited has agreed to pay a fixed sum of 3 crores exclusive of GST for the aforesaid service provided by ABC India LLP. So for ABC India LLP, output value of service is 3 crore rupees. An amount of 50 lakh is paid to ABC India LLP as advance at the time of agreement on June 25th. So in the June month itself, they are paid 50 lakhs. And the balance amount is payable on July 21st upon issuance of invoice by ABC India LLP. And the invoice is duly issued for the full amount in the month of July. When I say full amount, what is the balance amount? Balance amount is nothing but 2 crore 50 lakh. Then ABC India LLP has entered into an agreement with the Dream Hotels, a hotel based in Udaipur, for the aforesaid event to be organized for the employees of Trent Limited. So ABC India contacted whom, my dear friends? Dream Hotels. And Dream Hotels agreed to provide services to ABC India LLP, which includes accommodation and other ancillary services for aforesaid event at an agreed amount of 1 crore 50 lakh exclusive of GST. And please note that rate of GST is 14%, effectively 28%. Makes sense, right, my dear friends? And the consideration is payable by ABC India LLP to Dream Hotels at the time of check-in of guest on July 21st. Which date, my dear friends? July 21st. Now, please understand that Who is giving the accommodation service here? Dream Hotels is giving accommodation service for which they are billing 1 crore 50 lakh. Now, one point is very clear in relation to accommodation service. Place of supply is the place where immobile property is located or intended to be located. Section 12, subsection 3. Then, further, ABC and LLP has also entered into an agreement with Happy Gift House, a well-known gift shop in Udaipur, Rajasthan, for purchase of souvenirs for the employees of Trent Limited. Very good. It was agreed that souvenirs would be purchased by ABC and LLP from Happy Gift House at a consideration of 20 lakh, exclusive of GST 9918, and Happy Gift House would deliver them at the event location. Wow. So Maharashtra person has informed what, my dear friends, a Rajasthan person to deliver it to in Rajasthan. So this is something like build to ship to model. And place of supply is given by 10(1)(b). That is what, my dear friends, principal place of business of such third person. Next, aforesaid amount, that is 20 lakh, includes the cost of packing the souvenirs 20,000 rupees and cost of delivering the same 50,000. So what? Very good. That is always included because for 15(2)(b) valuation, 15(2)(c) actually. 15(2)(b) is supplier's obligation met by recipient. 15(2)(c) is all incidental expenses or anything charged by supplier from recipient is included in the value of supply. Entire consideration is payable by ABC and LLP to Happy Gift House at the time of delivery of souvenirs on July 21st. Then, in the month of August, Trent Limited gifts each of its employees, 150 employees, a water purifier in terms of their employment contracts. The total open market value is 52.50 lakhs, exclusive of GST, and all water purifiers bear the same cost, 52.50 lakhs for 150 employees. Come on, see now. 52 lakh 50,000 divided by 150 employees. That means for each employee it is 35,000 rupees. The reason I calculated that is this becomes not taxable because gifts given by employer to employee is taxable only if it is more than 50,000. Here, since it is 35,000, it is not taxable. Getting clarity, friends? Excellent. Then, Trent Limited and ABC India LLP are not registered under GST in the state of Rajasthan. Very good. There is no other taxable supply or procurement apart from Dream Hotels and Happy Gift House, as mentioned above in the month of July for ABC India LLP. Opening balance of ITC of both Trent and ABC for relevant tax period is 0. So there is no opening ITC. Whatever is there in this month, that only will take it. So all amounts are exclusive of GST wherever applicable. So based on the facts of the case scenario given above, choose what, my dear friends? Choose the most appropriate answer. Correct, my dear friends? Let's see now. First one. In case of the supply of souvenirs by Happy Gift House to ABC India, what is the place and value of supply? Already we discussed that place of supply will be Maharashtra and value of supply will be 20 lakhs. So answer is option A, my dear friends. That's it. Pretty simple, straightforward question. In this case study based MCQ, they basically try to give some situation or circumstance and ask you 4 or 5 questions on that, in which 2-3 questions will be directly straightforward. Second, place of supply for hotel accommodation service provided by Dream Hotels. Obviously, it will be Rajasthan only, and it will be an intra-state supply. Answer is option D, my dear friends. And the logic for that point is 12.3. In relation to immobile property, place of supply is the place where immobile property is located or intended to be located. And what will happen? Once location of supplier and the place of supply both are in same state, it is regarded as intra-state supply. And then CGST and SGST will apply. Third point. Net GST payable in cash by ABC and LLP for the month of July in the state of Maharashtra would be what? When I talk about month of July, my dear friends, you have to understand one point very clearly. We are talking about the month of July. So, for July, output tax will calculate only on 2.5 crores. Obviously, for a simple reason, because on 50 lakhs, already we would have paid tax in the June itself. How much is that? 2 crore 50 lakh into 9%. which is coming to 22 lakhs 50,000. 22 lakhs 50,000 CGST, 22 lakhs 50,000 SGST. And if I have to talk about my input tax credit, whatever tax I'm paying to Dream Hotels, that I can't take credit, because a person registered in one state cannot take credit of CGST, SGST paid in another state. So Maharashtra person cannot take credit of CGST, SGST paid in Rajasthan, other side. But he can take credit of that sovereigns. On that sovereigns, 20 lakh, definitely that person would have billed IGST at the rate of 18%, which is 3.6 lakhs. And IGST credit can be used for, first for IGST, then for CGST or SGST, any order, any manner. So let me say IGST figure, let me use 3.6 lakh here. So when I'm using 3.6 lakhs, from 22.5, 3.6 lakhs will become 18.9 lakhs. And SGST 22.5 lakhs. So my answer will be option A, my dear friends. Very, very interesting question actually. Makes a lot of sense. And you have to observe very clearly that they were talking only about the month of July. Next point. Finance team is exploring the feasibility of getting ABC India LLP registered as a CTP in the state of Rajasthan. Wow. If they register as CTP in Rajasthan, then they will give a IGST bill to Trent Limited. But whatever tax they are paying to Dream Hotels, that they can take credit. In such a scenario, invoice will be issued to Trent Limited, will be issued by ABC India as a CTP registered in Rajasthan. So we'll charge what? On 3 crore, we will charge IGST 18%, which is 54 lakh rupees. Then, moreover, invoice by Dream Hotels and Happy Gift House will be issued to ABC India LLP at its GST registration number as CTP in Rajasthan. So both of them will charge CGST and SGST. The estimated tax liability of ABC and LLP to be paid in advance at the time of submission of application for registration in the month of June will be what? This is the output tax. And what will be my input tax credit of the hotel? What was the bill for the hotel? The hotel bill was about 1 crore 50 lakh. On that 14%, 14%. That means 28% basically. 1 crore 50 lakh into 28% comes to 42 lakh. That I will anyways take credit, my dear friends. Correct, no? 42 lakh. And the third figure is 3 lakh 60,000. From 54 lakh, I'll reduce 42 lakh. I'll also reduce 3 lakh 60,000. 54 lakh minus 42 lakh minus 3 lakh 60,000. Balance is coming to 8 lakh 40,000 of IGST payable, my dear friends. So balance payable will be 8 lakh 40,000, and moreover, that is IGST only, because Trent is registered in, ABC is registered in Rajasthan, and they're going to give bill to Trent, who is in Maharashtra. So answer is option B, my dear friends, 8 lakhs 40,000. I hope this concept is making sense, my dear friends. Very, very, very interesting question. Are we clear with this point, everybody? All of us? Wonderful. Next point. Point number 5. Compute the outward GST payable, if any, on the water purifiers gifted by Trent to employees. Straight away answer is nil. So my answer is option C, my dear friends. Correct? No? Already know this, sir. I told you that it's nil for a simple reason, because the gift is not more than 50,000. Gifts by employer to employee not exceeding 50,000 is not taxable. Makes sense, right? Wonderful. That is the end of story for questions related to case study based MCQ. Now we have got some independent MCQ, which is not a case study based, separate independent MCQs. Let's see them. Sixth one. Nivedita Foundation, a charitable trust registered under Section 12AB of Income Tax Act, owns and manages a newly constructed Dharmashala Govindam in the presence of a temple in Haridwar. Govindam has got 50 rooms, a huge party lawn, and other amenities. Nivedita Foundation has received the following receipts during the period April to September. Rent of 25 lakhs from renting of rooms, 1,000 per day. This definitely becomes taxable. Exemption is only when renting of rooms is less than 1,000. rent of 9 lakhs from renting of party lawns for marriage and social functions at 9,000 per day. This will be exempt because taxability is only when it is 10,000 or more. Next. Donation of 20 lakh. Donations generally we don't tax, but see the bracket, including a donation of 15 lakh received with a specific direction to advertise the business activity of the donor. Then this 15 lakhs will become a supply. What is that they're asking? You are required to determine the value of taxable supply of Govindam. That is 25 lakh plus 15 lakh. Total is 40 lakh. Answer is option D, my dear friends. What an interesting question related to exemptions. Next point. Which of the following statement is not correct for similar goods valuation purposes under Customs Act? Similar goods, although not alike in all respects, have like characteristics and like component materials which enable them to perform the same functions and to be commercially interchangeable with the goods being valued having regard to quality, reputation, existence of trademark. This is correct. Similar goods must necessarily be produced in the country in which goods being valued were produced. This is also correct. Finally, similar goods must always be produced by the same person who produced the goods being valued. No, it need not be same person. Same country is important. It need not be the same person as such. You're getting my point, everybody? So which conditions are correct, sir? First condition is correct. First point is correct. Second point is correct. So only 1 and 2. Makes sense, right, everybody? Which question am I talking about? 7th one. Only 1 and 2 are correct. But what is that they asked? Which are not correct, they asked. And what is not correct is only 3 is not correct. So answer is option B, my dear friends. Read the question properly. They didn't ask what are correct. They asked what are not correct. Next. 8th question. Which of the following supplies, items or categories are ineligible for the scheme of remission of duties and taxes on exported goods? RODTEP, remission of duties and taxes on exported product. This RODT basically replaces the MEIS scheme. Whatever points we have got in MEIS scheme, the same points are there in RODTEP scheme also. Remission of duties and taxes on exported products. Choose the most correct option. Export of imported goods in same or substantially same form. Obviously, this is not eligible. You are getting my point, everybody? There should be some value addition. Export products which are subject to minimum export price or export duty. This is also not eligible. Products which are restricted or prohibited of foreign trade policy. This is also not eligible. Goods which have been taken into use after manufacturing. This is also not eligible. So technically, all these categories are ineligible for RODTEP scheme. So answer is option D, my dear friends. 1, 2, 3, and 4. Are we getting my point, everybody? Excellent. Next. Yeah, in fact, once we're done with the 8th question, that means we are done with the story of what? We're done with the story of multiple choice questions. Come on, my dear friends. Let's move to the next question. Moto Power Private Limited. Come on, what is the entity name? Moto Power Private Limited. Registered under GST in the manufacture of 5-seater luxury cars. Wow. At its factories located in the state of Rajasthan, UP, Gujarat. Rajasthan, UP, Gujarat. And they have taken registration in every state. Correct, my dear friends? It also enters into contract for providing these cars on rent to corporate clients, wherein the cost of fuel is included in the value of supply. Very good. Let's see now. Company reports the following details for a tax period pertinent to its factory located in Gujarat. They have given sales figure. They have given car rental income, income from services provided to Gujarat Government Administration 2.5, raw material, rent paid, consumable, security service, general insurance of car manufactured, works contract service, audit fee, bank charges, membership of automobile association. What an interesting points they have given. Next. All the above amounts are exclusive of all kinds of taxes wherever applicable. However, applicable taxes have also been paid by the company. Further, following additional details are furnished by the company in respect of the payments and receipts reported by it. Out of raw materials, whatever they purchase, how much they purchase? 4,50,000 they have purchased. Out of this 4,50,000, raw material worth 50,000, purchased from registered supplier located in Gujarat were destroyed due to fire in the factory and thus could not be used in manufacturing process. Remaining raw material has been procured from various vendors located in Maharashtra. So they purchased from people located in Maharashtra, and raw material whatever they purchased is from Gujarat. And we are talking about our person is where? Our person is in Rajasthan, Uttar Pradesh, Gujarat. And he is giving the details related to Gujarat. Correct, no? He is giving details related to Gujarat and he has purchased other materials from Maharashtra. So for that others, we will charge IGST. And for this 50,000, there is no input tax credit because this is blocked under section 17 subsection 5. Goods lost or stolen or destroyed or disposed of or written off by way of gift or free samples. Credit is not allowed. Next. Rent has been paid for the factory building located in Gujarat to its owner who is registered in Gujarat. How much is the rent? 1 lakh. Happily claim input tax credit. No doubt about it. Correct, my dear friends? Next. Payment for security services. Services provided by way of, what is that word? Services are provided by way of what, my dear friends? Supply of what? Security personnel for the tax period has been made to whom, my dear friends? Has been made to Safe and Secure Solution Private Limited, a company located in Gujarat and are not registered under GST. If they are not registered under GST, what will happen, my dear friends? They don't charge GST. Correct, my dear friends? And you can't even tell RCM will come into picture because RCM will apply only and only when supplier is other than body corporate and receiver is a body corporate. Then general insurance service have been availed from Dividend Insurance Company Limited registered in what, my dear friends? Gujarat. Very good. Works contract service is availed from, in fact, my dear friends, this ITC is allowed. Correct, no? The reason for that is we are talking about general insurance service 2.5 lakh of cars manufactured. Generally, insurance for car credit is not allowed. But since you are a manufacturer of cars, credit will be allowed because the concept is very clear in the law. Makes sense, right? Exactly. Then, works contract service availed from Chitra Builders, Gujarat has been used by the company for construction of a foundation on which machinery is to be used in production process to mounted permanently. So this becomes a plant and machinery. So what will happen, my dear friends? ITC is allowed. No doubt about it. Then, audit fees is paid to a firm of chartered accountants Pandey and Associates registered in West Bengal with aggregate turnover of 30 crores in the preceding financial year for conducting statutory audit of the company in the preceding financial year. The firm raises an e-invoice without IRN. So if it is without IRN, then it is not a valid invoice. Because whosoever turnover is more than 20 crores, they are required to do e-invoicing. And if they don't do e-invoice, what will happen, my dear friends? E-invoice must also contain an IRN, invoice reference number. So they raised e-invoice without IRN. What will happen, my dear friends, then? It is not a valid invoice. If it is not a valid invoice, then no input tax credit. Such a crazy point, my dear friends. Then, bank charges are towards various services availed by the company during a month with regards to its current account maintained with Money Bank registered in Gujarat. Bank issues a consolidated tax invoice for all such services at the end of the month, containing details of tax charge, description, value, GST number and all. Very good. Happily we can take ITC. Correct, my dear friends? Automobile Association registered in the state of Gujarat. Then claim ITC. No problem. ITC is not allowed only of a membership of a club, health and fitness center. This is not a club as such. So definitely credit will be allowed. Breakup of sales. Gujarat 14 lakh. Other than Gujarat 6 lakhs. Export under LUT. Then no GST. Car rental income. What is that word, sir? Car rental income pertains to what? Renting of cars to Jamas Travels Limited. To whom, my dear friends? Jamas Travels Limited registered in Gujarat. And the cost of fuel is included in the value of supply. Further, consumables procured from registered supplier located in Gujarat include diesel worth 75,000 used for running of cars so rented to Jamas Travels. So on this, what will happen? No input tax credit. And moreover, you have to understand that here the provisions of RCM will not come into picture because supplier is a company, receiver is also a company. So there is no question of RCM which will come into the picture. Getting clarity? What is the rate of GST? Did they give already? Nothing. Next, what else? Service provided to Gujarat Government Administration are under a health training program. Very good. 51% of the total expenditure for the program is borne by Rajasthan government. Tell me, my dear friends, what happens to this? 51% of the expenditure is borne by Rajasthan government. A very, very interesting point. Still, it becomes taxable because in case of training program, my dear friends, exemption is only when 75% or more of the total expenditure. What percent, my dear friends? 75% or more of the total expenditure. Come on, my dear friends. 75% or more of the total expenditure is borne by the government. Only then that service will be exempt. But here in this case, they clearly told what percent, sir? 51%. So it becomes taxable. And opening balance of ITC is how much, my dear friends? CGST, SGST, IGST. Compute total ITC available for the given period and net GST payable. CGST, SGST rate is 9,918, but for renting of cars, 2.5, 2.5, 5. It is important to note that credit of input tax charged on goods services used in supplying service of transportation of passenger by any motor vehicle designed to carry passenger where the cost of fuel is included is not available except the credit of input service in same line of business. Obviously, necessary condition for availing ITC have been complied with by Motor Power Limited. Very, very good. What an interesting question, my dear friends. First, let us calculate what is output tax, my dear friends. Intra-state sales in Gujarat, 14 lakh rupees. CGST, SGST, IGST. Intra-state sale in Gujarat, how much is that? 14 lakh rupees. On 14 lakh, we have to charge what percent, my dear friends? 9% and 9%, which is coming to 1,26,000 and 1,26,000. Then, next what? Interstate. How much is interstate? Interstate figure already what they gave is 6 lakh rupees. On 6 lakhs, straight away what percent, my dear friends? 18%. And 6 lakh 18% will work out to 1,08,000. No doubt about it. And exports, of course, in exports, what is the answer? There is no question of GST. And for renting of motor vehicle, I clearly told there is no RCM for a simple reason because why RCM will not come, sir? RCM will come only when supplier is other than body corporate, receiver is body corporate. In this question, supplier, receiver, both are body corporate. So there is no question of RCM. On 50,000, 2.5%, 2.5%, which comes to 1,250, 1,250. 1250, 1250. So getting clarity, everybody? Next. Service to Gujarat government, that is also, of course, taxable. That training program, that is exempt only when 75% or more is borne by the government. And what is the value, by the way? 2,50,000. And 2,50,000 into what percent? 9%, 9%. Of course, it comes to 22,500 and 22,500. That's it. This is the story of our output tax liability. So CGST figure 149,750, SGST figure 149,750, IGST figure 1,08,000. That is the story of my, what, my dear friends? Output tax liability. But that's not the story of my input tax credit that I need to calculate, my dear friends. Correct or not? Come on. What is my input tax credit? 50,000, 26,000, 35,000. That's my opening. Come on, let me go back. CGST, SGST, IGST. Let me calculate my input tax credit. Opening. What must be opening figure, my dear friends? 50,000 CGST. Then, what was the other one? 26,000, 35,000. 50,000, 26,000, 35,000. These are figures of my opening. Then, what is the credit I'm going to claim? Raw material. But I claim for raw material only on 4 lakh, but that is IGST. 4 lakh into what percent, my dear friends? 18%, which is nothing but 72,000. Friends, yes or no? Then, second point, rent to a owner located in Gujarat. On rent 1 lakh, what will I charge? CGST and SGST. On 1 lakh, 9% and 9%. Correct, my dear friends? So, rent 1 lakh, 9%, 9% will come to 9,000, 9,000. And raw material I've taken only on 4 lakh because we know that point very clearly. 50,000 is destroyed. Next. Then what else we have? Consumables. 1,50,000 is consumables, but out of that, please observe that 75,000 is towards diesel. On that, I will not take credit. Balance only, I'll take credit. So, what is the balance figure? 75,000. On 75,000, what percent? 9%, 9%. 6750 and 6750. Making sense, my dear friends? Exactly. Then, security services, 70,000. There was some issue related to that. They are not registered in GST, so there is no question of taking credit. Insurance, that I will definitely take credit. Correct or not, my dear friends? Insurance from Gujarat only. What is the value? 2,50,000. What percent? Of course, 9% and 9%, which comes to 22,500. 22,500. That is the story of my insurance. Then, works contract service, of course, I can happily take credit. 1,60,000. 1,60,000 into 9% and 9%. 14,400. 14,400. Then, what else? Audit fees, no credit because there is no IRN on the invoice. Bank charges, I will take 10,000, 9%, 9%. Membership also, I will take 10,000, 9%, 9%. So, bank charges 900, 900. Membership 900, 900. That's it. So, getting my point, my dear friends, everybody. So, what is my total input tax credit? Everybody. So, 35 plus 72, which comes to 1,07,000. This is very clear. Then, 1,04,450 is the credit of my CGST column. What is my IGST? 80,450. This becomes my input tax credit. I hope this point makes sense for everybody, my dear friends. All of us. Come on, let me set off now. 1,04,450. First, I have to use my IGST credit. How much is my GST credit? 1,07,000 gone here only. How much is my CGST credit? 1,04,450. That is gone here only. How much is my SGST credit? 80,450. 80,450. Balance figure will be, this will be 1,000, which is IGST column. Correct, my dear friends? And this will be 45,300. That's it. 69,300. So my final answer is 45,300 CGST, 69,300 IGST. Correct, my dear friends? 45,300 CGST, 69,300 IGST, 45,300 CGST, 69,300 SGST, 1,000 rupees IGST. That is the amount payable using electronic cash ledger. Such a fantastic question, my dear friends. Very, very meaningful and very, very sensible. That's how they ask questions in the exam, which is so wonderful, my dear friends. I hope we are clear with this. Fantastic. Come on, next. Come on, guys. Let's move to next question. Yes, very brilliant. So we're just done with case study based MCQ and one very brilliant, interesting, fantastic question. Next interesting question, guys. Adinath Private Limited, registered under GST in the state of Uttar Pradesh, instructed Ashok Transporters to deliver certain taxable goods to Mahavir Enterprises in Maharashtra on 10th January. Value of the goods is 6,80,000, which is chargeable to 18% IGST. So 6,80,000 into 18% IGST, which is 1,22,400. 1,22,400. Getting my point, everybody? That is the GST component. While the goods were in transit, PO intercepted the goods and the truck in which goods were being transported. Under section 68, very good. Officer has stopped. However, driver of the truck failed to tender any document in relation to goods in movement. Oh, craziness. Proper officer, after conducting physical verification of the goods and the truck, decided to seize the goods and the truck and issue a notice under 129.3 specifying the penalty payable by Adinath after giving it an opportunity of being heard. You are required to determine the amount of penalty payable if Adinath Private Limited does not come forward. Such a brilliant line. Does not come forward for payment of penalty. So if they do not come forward for payment of penalty, then the penalty will be 50% of value or 200% of tax, whichever is higher. Whichever is what, my dear friends? Higher. And let me tell you, in this particular question, what is the tax amount? 122,400. On that, 200% into 2 times, which is 2,44,800. So it will be 2,44,800 or 50% of value, which is 3,40,000. Whichever is higher. So my penalty is going to be 3,40,000. Such a brilliant point, my dear friends. Further discuss suitable course of action for Ashok transporters if it intends to get truck released. Then what will happen, my dear friends? For them, in relation to truck, the penalty will be penalty mentioned in the order or 1 lakh, whichever is lower. That is 3.4 lakh or 1 lakh, whichever is lower. Obviously, penalty, what will they pay is 1 lakh. Getting my point, my dear friends? A very, very interesting latest amendment which has come in the exam. Makes sense, right? Exactly. Good. Small, simple question. Next. 11th question. Super Lever Limited is engaged in manufacture of taxable electronic goods. Its 2 manufacturing units are located in Mumbai and Nagpur, and both are registered in the state of Maharashtra. Very good. Company has another manufacturing unit in Bangalore, registered under GST in the state of Karnataka. Wow. And a retail showroom located in Ahmedabad, registered in the state of Gujarat. Oh. So there are 2 units in Maharashtra, 1 unit is in Karnataka, and 1 unit is in Gujarat. Brilliant, yeah, brilliant. Be careful. Next. I hope you're getting clarity, everybody. All of us. Next. Company has provided following details of the transaction undertaken in a tax period. Mumbai unit, Nagpur unit. Sale of taxable goods. Interest received on fixed deposit with a nationalized bank. This is straight away exempt. Service by way of extending loans or deposits where the consideration is interest or discount. That is exempt. Correct or not? Yes, we know that concept, my dear friends. Then, sale of securities. Sale of security is not goods, and of course it is not service. Correct, no? Because in definition of good, security is not covered. In definition of services, there also securities is not covered. Then, sale of agricultural land in the vicinity of the manufacturing plant. Stamp duty was paid on 1,85 lakhs. So what? This is covered in Schedule 3, which is neither a supply of goods nor a supply of service. Next. Sale of old factory building which was not used anymore. Stamp duty was paid on 75 lakh, but it is sold for 90 lakh. What will happen, my dear friends? This is also covered in Schedule 3. Actionable claims other than betting, gambling, lottery. This is also covered in Schedule 3. Actionable claims other than betting, gambling, lottery. Now, what is it they're asking? Number 1. With the help of above information, you are required to determine the value of exempt supply under GST law provided by Nagpur and Mumbai unit. How much is exempt supply? In this question, nothing is exempt except the 1,08,000. For a simple fact and reason that if a transaction is not a supply at all, then it cannot be covered in exempt supply. Basic common sense only, because in order to become exempt supply, first of all, it should be a supply. Then only it is covered. Clear? Next. Will your answer be different if the value of exempt supply provided by Nagpur and Mumbai unit is to be determined for the purpose of apportionment of ITC under 17.3? Wow. 17.3 purpose. Important. For 17.3 purpose, this is not considered. For 17.3 purpose, this is not considered. But for 17.3 purpose, this we will take it as 4.5 lakh into 1%. 1% of sale value is considered as exempt supply. And for land and building, this is also considered where I will take stamp duty value, which is 1.85 crores. And here also I will, for the purpose of 17.3, I will take stamp duty value, which is 75 lakhs. So what is covered in exempt supply for the purpose of what, my dear friends? For the purpose of 17.3 will be 4,500, this one, 75 lakh, this one, 1.85 crores, this one. That's it. Simple. Clarity of thought on the concept is required. That if you are clear, then definitely you can answer this question. Make sense, right? Exactly. Good. Next question. In the above question, all other things remaining same, compute the value of supply most beneficial made by Bangalore unit as well as value of supply made by Ahmedabad showroom. If Super Liver Limited furnishing following information. Bangalore unit has appointed Equilibrium Sales as its sole selling agent. Once it is a sole selling agent, they become a related person. Because related person definition also covers sole selling agent. Clear, my dear friends? Everybody? So there is supply between what persons here? Related persons. Correct or not? Come on. They sell the electronic goods of Bangalore unit under invoice issued in its own name. Bangalore unit transferred the goods costing 7,25,000, which were sold by Equilibrium Sales on 31st October at 765. On 20th October, another electronic goods manufacturer supplied goods of like kind and quality to Equilibrium Sales as the one supplied by Bangalore unit at 7,75,000. Generally, this is what is the goods of like kind and quality. First preference we always give for open market value. But in this question, open market value is not given. So we will take price of goods, services and like kind and quality, which is 7,75,000. But this provision about is concerned in Rule 28, which says if the goods are further supplied by the recipient as such, then value of supply what you can take is 90% of price charge for that supply of goods to an unrelated customer. What value we supplied? We supplied at 7,65,000. On that 7,65,000, my dear friends, if I do 90%, it is coming to 6,88,500. And obviously, 6,88,500 is lesser than 7,75,000. So I would prefer the valuation to take as 6,88,500. You are getting my point, my dear friends? Very, 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 very interesting question, my dear friends. Next. Retail showroom at Ahmedabad transfers goods costing 85,000 to its agent, Paridhi Sales. Paridhi Sales sells the goods on 18th October under the invoice issued in the name of Retail Showroom at Ahmedabad. So, this is not a principal to agent and this is not taxable. Because taxability will come only when agent issues invoice to the customer in its own name. If agent issues invoice to the customer in the name of principal, then it is not taxable at all. P2A is not taxable. It is not covered in Schedule 1, supply of goods by principal to agent. Next. On 17th October, Paridhi Sales has sold goods of like kind and quality as the one supplied by showroom to Ahmedabad to a customer at 4,70,000. This point is unrelated only completely because first point is out. He is not an agent at all. So when he is not an agent, what will happen, my dear friends? What will happen? This is not a supply. This is not a supply at all. Taxability is a far distance. First of all, it is not a supply only. P2A is not taxable because it is not a supply. Next. Retail showroom Ahmedabad also transfers goods costing 225 to its agent Dara Enterprise on 15th October. Dara Enterprise sells such goods on 20th October at 1 lakh under the invoice issued in its own name. Very good. This is a wonderful P2A fellow. On 19th October, Paridhi Sales has sold goods of like kind and quality. So what is that value, my dear friends? Dara Enterprise is selling such goods at 1 lakh rupees on its own name, my dear friends. That is what is the interesting point they have given. On 19th October, Paridhi Sales has sold goods of like kind of quality as one supplied by retail showroom at Ahmedabad to unrelated customer. You have to understand one point very clearly here, my dear friends. Here it's not Paridhi Sale actually. This should be Dara Enterprise. Anyways, no problem. Please understand one point here. We are talking about Rule 29 in case of principal to agent. First preference is given to open market value, which is not there. Or 90% of price charge for supply of goods of like kind of quality to unrelated customer. What value we supplied? 98,000. That into 90%. Which is working out to 88,200. That becomes my value of supply. In the question only they are told they are not eligible for full input tax credit. That's important because if they are eligible for full input tax credit, invoice value is only deemed to be open market value. And open market value is not available. That is the reason why we applied all this concept, my dear friends. Make sense, right? Exactly. That is the story of this beautiful question number 12. Let's now proceed to question number 13, my dear friends. Sanmati Industries, registered in the state of Maharashtra, receives a machinery for repair in its workshop located in Mumbai, Maharashtra from Mitsubishi Limited, an automobile manufacturing company based in Japan. Very good. Repair work was carried out by Sanmati Industries, for which it was to be paid in convertible foreign exchange, Japanese yen currency, they might get it possible. While raising the invoice for the said consideration, accountant of Sanmati approaches used to ask whether dynamic QR code is mandatory required on the said invoice. You are required to advise him. Mitsubishi is not registered in India. Further, aggregate turnover of Sanmati Industries was 550 crores in the preceding financial year. Generally, my dear friends, if turnover is more than 500 crores, the concept of dynamic QR code is required for B2C invoices. Clear, my dear friends? But one special point, an interesting circular which has come up, which said that in case where, which clearly said my interesting concept, my dear friends, in case where supplier is located in India and recipient is located outside India and payment is received in convertible foreign exchange, for which place of supply should be in India. Here, if you observe, this is basically a performance related services given by 13(3) of IGST Act. Basically, we're talking about goods where physical presence of the goods is required. Basically, we're trying to talk about services which require physical presence of the goods. Place of supply is the place where services are actually performed. That is nothing but Maharashtra. So place of supply will be Maharashtra. So if you observe carefully, supplier is in India, recipient is located outside India, place of supply is in India, and payment is received in convertible foreign exchange. If all these conditions are satisfied, my dear friends, invoice can be given even without a dynamic QR code. And the logic for that point is very simple because that recipient who's there outside India, he can't use that QR code for making payment to supplier. So in this particular question, my dear friends, dynamic QR code is not mandatorily required. I hope we are getting clarity on this question. Wonderful. Next. Let's look at question number 14. Briefly answer the following question with reference to provisions of rectification of mistake or errors apparent on the face of record. Under 161, which documents are covered? Basically, it covers any decisions, orders, notices, everything is covered. Any decision, any order, any notice, any certificate, or any other document is covered. Getting clarity, my dear friends? And who can rectify the errors apparent on the face of record? Who will rectify is who has passed that order, who has passed the decision. They will only rectify the mistake apparent from record. Third, what type of mistakes or errors can be rectified? That can only be rectified, which is a mistake apparent from record. If it is that kind of mistake where it is debatable to decide what is the answer, then it cannot be rectified. Because the benefit of this rectification is given only for an error which is apparent from record, which is clearly evident and which is not debatable. Next. What is the time limit for rectification? Wonderful. Let me tell you, my dear friends, in general, the time limit is 6 months. But the provisions of time limit will not apply in case where in case where rectification is only in the nature of clerical or arithmetical mistake. Clerical or arithmetical mistake on account of some accidental omission, something like that happened. A small accidental omission occurred because of which there is a clerical or arithmetical mistake. In that case, my dear friends, the provisions of time limit will not apply. But general time limit is what? General time limit is 6 months. Are we getting clarity on this, everybody? All of us? Exactly. Next one. Question number 15. What is the difference between zero rated supplies and exempt supply? Guys, we know very clearly. Zero rated supply covers only two things. Number one, exports. Number two, supplies to SEZ. Exempted supplies are those which are exempt because of a notification, and exempted also covers nil rated and non-GST. Non-GST means those which are not covered under GST. And in case of zero rated supplies, input tax credit is allowed. But in exempted supplies, input tax credit is not allowed. And moreover, in zero rated supplies, whatever credit is there, that we can happily claim it as a refund. But for exempted supply, we can't take any question of refund. And one more interesting point, friends, that is, in case of exempted supply, we are required to issue a bill of supply. But for zero rated supply, we issue a normal tax invoice. Very, very interesting. For zero rated supply, we can take input tax credit. But for exempted supply, there is no question of claiming input tax credit. Getting clarity, everybody? Wonderful. That is the story of this question number 15. And in fact, that's the end of GST part also. Now, whatever questions we have got, it will all be related to customs only. You will find 2-3 interesting questions now. See now. Question number 16. John Biden, age 32, is a tourist of foreign origin. So if a tourist of foreign origin, he is coming to India for a travel visa. What is the exemption, my dear friends? Rule 3 of baggage rules. What is the answer? Baggage rules 2016. He will get exemption only for what? Used personal effort and travel souvenirs. And articles up to a value of 15,000, excluding Annexure 1 items. What is Annexure 1? We clearly know. What is Annexure 1? Firearms. Cartridges of firearms exceeding 50. Alcohol or wine in excess of 2 liters. Tobacco exceeding 125 grams. Cigars exceeding 25. Correct, my dear friends? For that, the limit of what do you call this? For that, the limit of this 15,000 will not apply. Everybody getting clarity? All of us? Excellent. Next one. Used personal effects. 50,000. What will happen, my dear friends? No duty. Travel souvenirs. No duty. Laptop. One laptop is straight away exempt, my dear friends. One laptop, if it is imported by a passenger who is aged 18 years or more, that will straight away be exempted. Clear? Next. Let's look at tobacco. How many grams? 200 grams. Tobacco exceeding 125 grams, that is only covered in Annexure 1, which will charge duty separately. 100% duty is there for that. But up to 125 grams, we can take in Annexure 1. 125 grams into 5 rupees per gram, which works out to 625 rupees. Then cigars, 50 cigars valued at 100 each. How much is the value? 5,000. How much is more than 25? 25 cigars into 100, which comes to 2,500. Are you understanding, my dear friends? Everybody, sir. Next, firearms. Firearms, my dear friends, we can't take in what? We can't consider for GFA. GFA is not considered. 80 cartridges of firearms up to 50. Beyond 50 is not considered for GFA. But up to 50 cartridges, we can take under GFA. So 50 into 500 is how much, my dear friends? 25,000. 1.5 liters of wine. That is absolutely okay. Because alcohol, liquor or wine up to 2 liters, we can take under GFA. What is the value, my dear friends? 5,000. Mobile phone, 80,000. What is the total? 625 plus 2,500 plus 25,000 plus 5,000 plus 80,000. Total is 1,13,125. From that, we'll reduce 15,000, which is a general free allowance. What allowance, my dear friends? 15,000 will be called as a general free allowance. What is the balance left? If I reduce 15,000 from this, it comes to 98,125. And on this 98,125, we will charge duty at the rate of 38.5%. The reason for that is 35% is the baggage, 10% is social welfare surcharge, which comes to 38.5%, 98,125 into 38.5%, which is coming to 37,778. So my duty payable will be 37,778. That is a duty payable on this baggage which is imported by Mr. John Biden. I hope we are getting clarity, everybody. And for firearms, cartridges of firearms exceeding 50, cigars exceeding 25, tobacco exceeding 125 grams, we don't apply baggage rate. Further, there is separate called 100% duty. Getting clarity, but they are not covered in the baggage rates. They are not chargeable to rate applicable to baggage. They will be charged at 100% rate. You're getting my point, everybody? All of us, my dear friends. Pakka clear? Excellent. Such a brilliant question, my dear friends. Makes a lot of sense. That's the end of story for question number 16. Now, my dear friends, let's look at the last two interesting questions. Question number 17, my dear friends. See now, BCG Limited, what they have done, they import goods from Japan and intends to avail the benefit of exemption notification issued under 25(1). Wonderful. With regards to goods, however, since it does not have manufacturing facility at all, it needs to send the goods so imported for job work to a job worker. Its accountant advised it that as per customs rules 2017, that is import of goods at concessional rate of duty, BCG Limited is not permitted to send goods for job work. Nonsense, they can send it. You are required to advise them elaborating relevant legal provisions under customs law. In fact, my dear friends, a new provision has been brought in that is called Rule 6A, which clearly says that importer who has imported the goods, he can send the goods for job work, but he has to clearly maintain a record as to what are the goods which have been sent for purpose of job work. And when he's sending the goods for job work, he has to issue an invoice for that purpose and ensure that the maximum time period for which the goods can be sent to the job worker is only 6 months from the date of invoice. And moreover, it is important to note that, my dear friends, all the conditions which are there in the law have to be satisfied. If any violation is done, customs officer will take necessary action. And it is also the responsibility of the job worker to maintain a proper account of the receipt of the goods and also a proper account of the manufacturing process, what he has undertaken, and the waste, if any, generated. And all the details have to be produced to the customs officer whenever he wants that details. You're getting my point, my dear friends? All of us. And it is the responsibility of the person sending goods to the job worker should maintain the proper records of the same, and whatever monthly statement he is filing, in that he has to disclose the details of the goods which have been sent for the purpose of job worker. And also at the same time, it is also the job worker responsibility that once the job work is complete, whatever goods have been processed, that should be sent back to the importer or should be sent to another job worker if importer says if there is some other activity which is pending. Getting my point, everybody? That's it. That is the story of this interesting question number 17, my dear friends. See now. Finally, the last question of this paper of RTP November 22. Niryat exporters imported some goods on 1st of January. The goods were not meant for being used in 100% EOU, STP, HTP. Goods were cleared from the Mumbai port for warehousing on 8th Jan by presenting an into bond bill of entry, 3 times the amount of duty. The assessable value was $10,000. On 8th January, exchange rate was 66 per dollar. That is when they filed bill of entry, it is 66 per dollar. That is important for the purpose of conversion. And the BCD was 15%. Fine. The order permitting deposit of goods in warehouse for 4 months was issued under Section 60 of the Customs Act on 15 January. Even though they gave time for 4 months, after 90 days, interest will start at the rate of 15% per annum. Goods were thereafter deposited in a warehouse at Pune and were cleared from warehouse on 31st of May. Very good. The rate of BCD was 15%. So as on 31st of May, it was what percent, my dear friends? 15%. And the exchange rate was 68.75 per dollar on 31st May. IGST at 10% is applicable. Next. Further, rate of BCD was 12% and exchange rate was 67 per dollar on 15th of May. Which date, my dear friends? 15th of May. Ignore AIDC and you're required to compute total duty payable and interest. Sir, please understand, first and first one important point. That is, goods were imported when 8th of January. Correct, my dear friends? And when was the order passed? Order was passed on 15th of January. When the order was passed on 15th of January, how many months time they are given? 4 months. So 15 January, 4 months if you see, February, March, Jan to Feb, Feb to March, March to April, April to May. So 15th May, that time limit of 4 months is getting expired. Yes or no? Permissible time period of 4 months is getting expired on 15th May itself. But you actually removed on 31st March. Even though you removed on 31st March, my dear friends, we will see the BCD rate on 15th May only. The reason for that is very clear, that if the goods are not removed from the warehouse within the permissible time, they are deemed to have been improperly removed. In fact, there was one case law also for this. Supreme Court one ruling called Kesharam Ryan, where they clearly told that if the goods are not removed within the prescribed time limit, then they are deemed to improperly removed. And please see the BCD rate on the last day on which goods should have been removed. So on 15th May, we will see the BCD rates. So if you observe carefully, what is my assessable value? $10,000. Exchange rate, what will I take? 66. Obviously, because we will see on the date of filing bill of entry. And what is the duty rate I will take? 12%. Correct, my dear friends? Come on. $10,000 into 66 into 12%, which is working out to 79,200 into 110%, because I'm always going to charge social welfare surcharge at the rate of 10% of BCD. 87,120 is my customs duty payable. 87,120 will become my customs duty, what, my dear friends? Payable. Are we understanding, my dear friends? Everybody said exactly. And second question, they also asked, what is the interest payable? I already told you that interest will start after a period of 90 days. And 90 days we will see from the date on which order permitting deposit of goods in warehouse has been passed. When is it passed? 15th January order has been passed. 15th Jan it is passed means we will see 90 days from there. Correct, my dear friends? 15th Jan 90 days means Jan 16 days. 16 days in Jan, 28 days in Feb, 31 days in March, 31 days in March. Then, once again, when is the order passed, my dear friends? Order has been passed on 15th of January. Correct, my dear friends? When you talk about 15th of January, from period beyond a period of 90 days, 15th Jan it has been passed. For how many days you can put in the warehouse? You can put in the warehouse for a period of 90 days. That means what? 16 days in January plus 28 days in February plus 31 days in March. 31 days in March, 16 days in Jan, 28 days in February, 31 days in March plus 15 days in what, my dear friends? April. So 15th April, story is over. Correct, my dear friends? So basically, your 90 days is getting expired. 90 days is getting expired. Yes or no, my dear friends? All of us. So if the unit remain in the warehouse beyond the period of expiry of what? 90 days. Then after that, we will start charging what, my dear friends? Interest. So April, how many days? April, about 14 days in April. And May, 31 days in May, which works out to 45 days. So my interest calculation will be, what is my duty? 87,120 into 15% into 45 divided by 365. So my interest is coming out to 1611. My interest figure is coming to 1611. So getting my point, everybody? because you have to understand that 90 days calculation will basically start from 16th of January. You're getting my point or not, everybody? That is the whole story of this 1611, my dear friends. And in fact, that is the end of discussion of this beautiful RTP of November 2022 exam. Something extremely wonderful and extremely fantastic, my dear friends. With this, I'll close this RTP and I wish you all the very, very best, my dear friends, and wish you all success. Do perform extremely well and come out with flying colors. Any doubt, we are always there for your support at Indigolearn. Feel free to comment. We'll be happy to reply. Feel free to post a query on the forum. We'll be more than happy to reply on the query. Because the forum is very, very active, my dear friends. We have got a specific team who actively works on the forum. So we'll ensure that we'll reply all your queries on the forum. Thank you so much, my dear friends. Take care. Shivateja signing off. Wish you all the best. Wish you all success. Bye-bye.